Good afternoon and welcome to Midday Asian Midday Market Watch. I'm Samantha Voon, and let's start by taking a look at the summary of the market action. Brian, over to you.
Now, let's start with Asia now with many Asian stocks up on a positive trend from Wall Street, driven by growing anticipation of a potential interest rate decrease in September. At the same time, Chinese markets didn't perform as well due to worries about a slowing economy and the challenges rising from US political factors. Now, there's a surge in talk about the possibility of Donald Trump becoming president, which contributed to the buoyancy in stock markets. Now, this optimism stemmed from expectations that under such a leadership, regulations may become more lenient. Now, we start first with China and China's Shanghai Shenzhen CSI 300 and the Shanghai Composite Index remained stable or slightly lower, while Hong Kong's Hang Seng Index dropped by 1.57%. Now, this is around concerns regarding a potential second term for President Trump, which impacted China's stocks negatively. Now, given his historically strong stance against China. Now, during his presidency, Trump enforced significant tariffs on China, leading to an extended trade dispute between the two countries in the late 2010s. Now, Chinese markets were already struggling due to worries about a new trade conflict with Western nations after the European Union, following the US, imposed high import tariffs on crucial sectors, now including the auto EV sector. Yesterday's release of underwhelming second quarter gross domestic product figures contributed to a more pessimistic outlook on China. Now, the current focus is now on the Chinese Communist Party's third plenum, which increasingly calls for Beijing to introduce additional stimulus measures. Now, over in Australia, the ASX 200 experienced a 0.19 decline from its peak levels, primarily due to substantial losses in the prominent mining company Rio Tinto. Given the current economic challenges in China have negative implications not only for Rio Tinto, but also for other Australian companies involved in exporting commodities in China, such as the BHP Group. Now, Sam, over to you for the rest of the regional updates, starting with Japan and Korea.
Thank you, Brian. So we have the Kospi in South Korea increased by 0.16%. And in Japan, the Nikkei 225 rose 0.31% after yesterday's holiday break over in Japan. So in India, the Nifty 50 is up 0.21%. In Singapore, the STI is down 0.26%. And in Malaysia, the KLCI is down 0.24%. Brian, over to you.
Now, to give us insights into markets, we have our guest today, Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, coming to us out of Singapore. Vishnu, it's always great to have you on the show.
It's always good to be here. Thanks, Brian, for having me. Thanks, Sam.
Now, good to see you, Vishnu. Yeah, good to see you, Vishnu. So, Vishnu, could you perhaps just start off the show by giving us an insight into the Trump trades?
Sure. So, clearly after the foiled assassination attempt, markets are somewhat inclined to the so-called Trump trades. And to explain what they entail, generally speaking, Trump trades are related to US equities going higher. That's related to two things. One is expectations that Trump will cut taxes, have deregulations that boost earnings in some sectors. But there's also an aspect of it which is based on some of the protectionist measures that may be beneficial to US companies. And of course, the bigger backdrop to it is, I think no other US president has been so obsessed with the stock market as Trump has been, and he has a tendency to talk it up. So that's one aspect of it. The other aspect is probably more inadvertent. He doesn't plan for it, but his policies tend to be more detrimental to other currencies, such as the renminbi, the euro, for geopolitical and trade reasons, and that tends to boost the dollar. So inadvertently, Trump trades also translate into more dollar support than otherwise. And finally, I think there's an expectation that Trump will not immediately, but ultimately be more inflationary due to tariffs, so on and so forth. He's also related to higher debt in the US, and that causes long end interest rates to go up. So that's why Trump trades play into the so-called steepener, where long end yields rise more or are higher, are pushed higher with respect to short-term interest rates. So those encapsulate, broadly speaking, the Trump trades. We've seen them advance somewhat, but they're not quite in takeoff mode yet. So markets are incrementally pricing it in.
Okay, then Vishnu, on the flip side of the equation, we've got the Trump trades, but we still have the Fed, which is supposed to be independent. So what is the House view on the Fed's thinking, especially Chairman Powell's?
I think, increasingly we are having some of our views validated, and that's twofold. First, we think most of the work on disinflation, at least what's required to start rate cuts, is pretty much done. And he's also increasingly, and in fact, very recently, he's confirmed that, saying that the Q2 set of inflation numbers gave him or added to his comfort that inflation is getting where it should. But more importantly for us, and this is our central point, which is it is really downside surprise in the jobs market that's going to shift the needle in a big way. And he alluded to that. He said what keeps him up at night is balancing between the two risks of inflation not being tamed sufficiently versus the trade-off of dampening the economy too much and destroying too many jobs. So he did allude to the fact that if the jobs market situation deteriorates suddenly, they could have avenue to move more. Our own experience is that typically jobs market deterioration tends to be a lagging indicator, and it's not linear. It doesn't happen gradually. So increasingly, we're going to the space where we reside, which is the immediate prospects of rate cuts are somewhat measured, but we think as we get into the middle of 2025, the likelihood is more, not less, than what the Fed has suggested so far.
Mm-hmm. Vishnu, I just want to move us over to China for a bit. So all eyes are on the plenum, but there's still a sense of like doom and gloom there, right? What's your view on China right now?
Yeah, I mean, I think China has got a lot more work to do in terms of restoring confidence. And I think that's at the heart of getting the economy so-called back into escape velocity, where it can be self-sustaining based on private sector confidence that drives the economy. Whereas we are in a somewhat unhealthy space where what little optimism there is about the consolation in data, things such as industrial output being fairly stronger or exports being fairly stronger, is a lot of the forward-looking optimism is hinging on very strong stimulus that markets hope will be unveiled by Beijing, whether it's the plenum or elsewhere. Our take on it is it's a plenum, not a panacea. Not all of the problems are going to be solved. Historically, there has been very few instances in which the plenum proved to be the saving grace. I don't think it's going to be very different now. In fact, one of the things is even if they announced more measures or indicated and signaled more intent to have more stimulus, the trouble is the bar is so high. I mean, markets' expectations are so high that there's going to be stimulus riding to the rescue. And to fulfill that in the details of the stimulus is going to be rather daunting. And that's where I think we'll fall short, which is why our fundamental view is the renminbi could remain under pressure even as the PBOC holds back on rate cuts.
Okay, thank you so much, Vishnu, for coming on the show.
My pleasure. Thanks for having me, Brian. Sam.
This has been Midday Asian Midday Market Watch. Be sure to keep informed on the latest market updates weekdays at 1 p.m. I'm Samantha Voon.
And I'm Fernandez.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platform. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.